Hey, hey. All right. We'll wait for everyone to kind of trickle in, and let me get Kathy in the room as well. And hang on. Hey, Heather, could you send can you send me a link for the Zoom thing really fast?
Oh, I don't know how to send a link.
Okay, never mind.
I'm sorry.
That's okay.
I can send the number to you, like to get into the room.
Yeah, not the one that has the Zoom, like the full URL,
Oh,
right?
hold on. Let me go through everything.
Here, I could probably find it in that time. Hang on. Oh, man.
Got it.
Okay, go ahead and text that to me if you don't mind.
Okay. Okay, sent.
All right, very nice. Thank you.
Welcome. You tell me something new. What do you need, Zach, before I jump on this call? What do you need? Really quick, come. Okay.
All right.
Oh, God.
Alexa, cancel. All right. Kathy should be on any minute. How's it going, everybody?
Good.
Good. Hi, Kathy.
Doing good.
Hi, Sadia.
You already get on?
How are you?
I'm all right.
That's good, girlie.
All right, you guys are gonna be my guinea pigs for a second, okay? I'm gonna send you a link in the announcements thing, and you are going to, oops. I'm gonna send you a link in the announcements thing, and you are going to secure your meeting for next week. And we're gonna see if I have any idea what I'm doing when it comes to this system. Okay?
Okay.
And I will be back in 1 minute.
Hey, somebody fill me in, please. I missed that. My son was talking to me.
He's going to send us a link in the WhatsApp about, it's a Calendly link to get us into our appointment, like your 30-minute business analysis.
Cool. Oh, so we pick a day.
Yeah.
Isn't he fancy pants?
Yeah.
Nice.
Except I don't know what to do. It's not clicking on the
Okay.
date.
Okay, so you get to pick the date. You get to pick I chose 3:30 Friday, actually.
3:30 is Monday, right?
No, the time. Like you click on a date and it'll tell you what times are available.
Perfect. Okay, we'll see if that works. I have a draft of the schedule for next week, which is not completely. All right, it's Kathy Vitale in the house.
Oh, I didn't do video, did I? I don't know
Not
what
yet.
I'm doing on
There's
this.
still time.
All right, let's see if I can switch this over.
All right. What did everyone think about the last session?
Which one?
Oh, with Bill
With
and what with Andy and James?
With Andy and James.
Oh, heck.
One of these days, Pam and Anu will get to see your face, right?
Well, you know what? I liked it because even in the slump, shelter still thrived because he kept a positive attitude
Yeah.
and, he kept digging in and digging into his business partners, people he had done business with.
And he created business partners.
Right.
Right. He used the downtime as an opportunity to look at the people, go out into the marketplace and find the people who are making things happen. And then he showed them that he was also making things happen. And the next thing you know, they're doing it together.
Right.
Any other thoughts?
Choose your words carefully.
Your
Your
okay.
response was, okay, we'll try to see if it works.
Okay, but do you not understand what I'm trying to say?
No.
Okay.
Charleston, you've been muted. Who else has some thoughts? Kathy, tell us something.
Can you hear me?
Yeah.
Okay, you can't see me because I can't figure that part out, but I'll figure that out the next time. So, in listening to James and just what we've been going through, which we're on the 11 o'clock call, I'm on the Keller call every day. The key is business is still booming. I'm doing pre-qualifications every day. I'm giving rates every day for contracts. We still are moving purchase pipelines through the process. So just like James said, there's business out there. It's just what part of that business are we all going to get? And how are we going to get it?
Exactly. And you've been in the business a long time. What advice do you have for the majority of the people on the call are relatively new, but we also have some cappers on the call. What advice, if you were given the floor and given a chance to speak to, give some advice to agents, what's the first thing that pops into your mind?
Well, it's staying consistent, and everyone that we've spoken to or heard from, since the Zoom calls, it's a consistent theme. And I was I was not in protocol 2.5 weeks ago or when all this started. Not being able to come to Keller every day, which I've done for 14 years. And then before that, my mortgage office was just a whole change for me. So I didn't get up and get dressed. I got, it was pajamas all day and hanging out. And I was working hard, but not in the professional work clothes feeling business-like.
Right.
So that I shifted. I'm like, that's crazy. I've got to get up. I've got to put my makeup on, put clothes on, get the attitude of I start work every morning by 8, if not earlier, depending on the calls that come in. I'm not giving in to this. And I'm not stopping the day because maybe I can. Well, I haven't been able to because it's been so crazy, but even if I could stop, even if I could take a break, I'm self-employed, just like all of you are. If I'm not putting 8 to 10 hours of time into my business, and again, you guys have to work on the weekends probably more than I do, so you have to shift those hours. But if you're not doing that, and if it's not a concentrated, proactive plan, then that does dictate failure.
Right.
You're not on your game. You're not on your game. It's like, what is your game? I have to put my game face on. I have to put my attitude in and my game face on. So that's kind of what I shifted to. Starting on Monday, it's like I have to get up and I have to have my game face on. I have to have a schedule every day. I have to write it out the night before. I have to know what my priorities are, and then what I'm going to do proactively above those priorities of the have-tos to just the day-to-day business. So I'm working in the business. What am I doing working on the business? And that's just something every day. It's like, what am I also doing? So I actually started thinking about a couple of people at the office that were Keller Williams agents and clients that I knew that didn't have a significant other, that might be a little bit older, that are secluded now, that might need someone to talk to. And starting on Tuesday, I started calling some of the agents in the office and past agents in the office, and clients that I thought might just need someone to talk to, just to add that to my day.
I love that. I love that. Let's back up. I want to give you more of a formal introduction. This is Kathy and I have actually known each other. Well, we haven't known each other that long, but her husband and I go back quite a while, till I was about 9 years old. And Kathy, when I was a practicing karate student, I worked with Keith, Kathy's husband, and some of his old colleagues and business partners. And so it's quite a cool experience 10 years ago to re-meet you under these circumstances. So I can't speak highly enough about Kathy and her team. She has been she's not just there, as you can tell, just to sling loans, right? This is truly a business partner. Who's in the background typing? Is that
I'm
Kathy?
sorry. I've got underwriters asking me questions. Sorry. I'm like clicking in your ears. I've got underwriters going, I need this, I need that. I'm like, okay, I'm going to put it over so you can't hear me as well. Sorry.
Kathy is truly a partner for us. She's not just there to answer the deal with a pending client or future client that's going to be taken loan application for. She's helped a lot of our agents with deals that other lenders are providing the financing. She's helped me with other deals where other companies are providing the financing. And she has, for many of us, it goes without saying, you've been a critical member of our team in terms of all of our activities in the community, from Red Day to family reunion to trainings. You have made substantial investments in our businesses and at Keller Williams Roswell, and I just take a opportunity to publicly thank you for that. We had a request to bring you on today, and I just had a couple of maybe if I can push you in a couple different directions. I wanted first to give you the floor to help us understand and maybe even take some questions about what's going on currently in the mortgage world and how we can best serve our people and update our people with whatever is, you think are some of the most critical things to share. And I also, so we'll start with that. And then I want to reserve some time at the end, maybe. I've had a couple of independent conversations with some of the people on the call just about how to best eliminate the kind of like last minute urgency of like, oh my gosh, I don't know what the closing costs are. Oh my gosh, I don't know what type of loan this person's getting. Oh my gosh, I want to make sure I write the financing side of this contract properly. And I would love to, number one, help people understand that you can be a great partner to answer those questions. But they can take a couple of very simple steps at the very beginning of the courtship, and that will help reduce the stress for everyone involved and help you be a better lender and help them be a better agent. So that's what I have in mind for the later part of the call. But maybe you can kind of take the floor a little bit and share with our people here what's kind of going on in the mortgage world right now and what you're experiencing on a day-to-day basis, and maybe give them some tips and strategies to keep their attitude positive.
Well, the first thing, let's go over what James talked about and Andy, and this is the second time I think you've heard this, because if y'all were on the Zoom call the other day, I talked about it. Does everyone have an understanding about the non-qualified mortgage, what that was and what just happened this week? Do you have any questions about that?
I don't know.
Okay. So in lending, you have your standard loans. You have the Fannie Mae, Freddie Mac, which is just your straight conventional loan. You have FHA, VA, and then you have rural housing. Now, those are your standard qualified mortgage. That means that there's a debt ratio involved, there's a credit score involved, and it's government attached, backed and or attached. The non-QM mortgage are the mortgages that companies, our parent company is NewRez, one of the largest servicers in the nation. They had their own portfolio of loans. You've got Angel Oak, you've got big names through the industry that a couple of years ago and said, you know what, we've recovered some, but there's some niches out there that are good loans and we need an outlet for them. The self-employed person that writes off, so many deductions that they can't qualify for a normal qualifying mortgage. So therefore, the bank statement loan was created. Take bank statements from their business or personally, look at the income over 24 months and give an income and do a 20% down loan. There was for investors, investor loans that are a little bit more creative, asset loans, taking a person's assets and using those to get an income from it. So just more of a creative outlet for that person that doesn't fit the mold for all the standard loans that I just said. Those are gone. So as of Monday, that market, having a market of money, all investors, everyone putting pools in that money pulled out. They said, it's just too risky right now to do those loans. So any loan that was in process, any loan that ever wanted to be in process, it was just gone. There's no place to close the loan, which was, of course, a huge ripple effect in our industry. And then as of Tuesday afternoon, we started getting information from Chase and other companies that they were no longer interested in closing or taking any jumbo loans. There's still a lot of companies that are doing jumbo loans, but in our history, and I've been doing this for 38 years, the jumbo lending will tighten up next, more than likely. If anything tightens up through this period, the guidelines and or the resources for jumbo loans are going to be changing. And then James did mention that Ginnie Mae, there's some things going on there, so that may cause some higher rate right now on FHA loans. It hadn't happened yet. So what happens in our industry when the industry is taking these ripple effects is every day we get into something else that comes up that we have to deal with. We're working on strategically with O'Kelly and the other attorneys of how to just get everybody to the closing table on time and have a safe place for them to close. And that's a whole new platform that lenders have never thought about. With this going on, I mean, whoever thought that you didn't want the realtor or the seller, to be in the same room with the buyer and/or, one buyer show up, one come later. So that's another change. But as these changes come along, our company all works through it with local attorneys. Joe Kelly's always called on this type of situation to see what we can do. So it's a proactive situation as soon as we know we need to be involved in that. And I've always said, and I mean it, guys, and those that have been in the team meeting, even if it's not my loan or my team's loan, if you have a situation with another lender, you can't reach them, you don't feel like you're getting the right information, the information sounds sketchy, you're not experienced enough in the business to even know if it sounds sketchy or not, you're just not sure, I'm here for you. Tammy is here for you. Call us and let us help you, especially right now with anything you're up against, and give you our advice to help you get through it. Again, with these changes, if you have someone pre-qualified, you do want them to be reaching out to the lender to see if anything has changed with their company, if that pre-qualification letter, pre-approval letter is still good. Because if they were a non-QM mortgage, bank statement loan, then they're not good. That's gone. If they're jumbo and it was with a certain company, Chase is one of them, they may not have a loan now. They may not have an outlet. So you being proactive with your pre-qualifications with the people you've talked about to make sure they understand that these industry changes are going on are very, very important right now, that their loan officers keeping them informed. And, and as informed as they can be in that given day, unfortunately, because of the changes happening so quickly.
For those people that have ever done a transaction with a lender other than Kathy, have you ever encountered a lender that's not keeping you or your client up to speed on every detail of the transaction? Has that ever happened to you guys? Yes?
Yeah.
Right.
We talked about it last week or the week before, 2 weeks ago, when a listing I had that was supposed to close on the 16th fell through because of a multitude of reasons. Wells Fargo being the biggest reason. But I was told, you know, I told you, I was told she's good as gold. And I don't think, you know, she wouldn't have, it was just a mess. And I still haven't recovered from that. And my client hasn't, you know, emotionally recovered.
Yeah, I think the biggest takeaway is that we have to be in business with people who have a standard that is acceptable for our business.
Yeah.
So I've mentioned this to you guys a few times. It's kind of like this idea of, look, Kathy, here's how I want to do my business. I expect updates at this rate. I want to in this fashion. When I ask for a pre-approval letter, this is how I want it presented. And if you are willing to work with me, and I promise to be respectful and communicate the way you need to be communicated too, but if you can meet the needs of me and the systems I've established, you got the job. If you can't.
And that is the key, Bill. It's communication on how do you want communication. I mean, I have some agents, all they want to do is text. They even do introductions of their client through text or through Facebook Messenger. I have some agents that they want to talk. I mean, they do want to talk, and they want to talk it through and understand it. And you know, with some agents, it's Kathy, if I don't hear from you, I know it's good. Others, it's like, I really do want to hear from you every week. So you have to, you know, you have to have that that communication with the loan officer on what you're allowing them to work with your client. You have the right to demand what you need out of them, you know, to be a part of your team.
Exactly. And if they don't want to be a part of that, or that doesn't work for their business, then it may not be a good match. And that's okay as well. At least you have that dialogue now. So I'll give you an example of one of the things. This will kind of blend into what I wanted to talk about towards the end of the call. But Kathy, we haven't done this a ton together, but one of the things that I always used to say was, look, I want a loan worksheet. When you give me the pre-approval, I want a loan worksheet. And what that means is that, let's say Joe Schmo gets pre-qualified and they're able to buy a home, and they're able to take a loan of $350,000 on a 5% conventional rate, or 5% conventional down payment. And I say, go get pre-approved. And they come back to me and they say, we're good. So that only solves half the battle. Now I know I can go show them those homes, but if I don't know what type of loan it is, if I don't know what the down payment is, if I don't know whether they can, you know, if they're getting an FHA loan, then maybe I got to make sure something's going on with the condo association. Or if they find a home they want to write and I can't immediately know how much closing costs to ask for, then there's a good chance I'm either going to ask for too much or too little, right? Not to mention the fact that just because they can qualify for it doesn't necessarily mean they're comfortable with the payment it requires. And when I asked the lender to provide that type of, Kathy, tell me if I'm killing you here, but
I'm right there.
We haven't prepped behind for this, but that was one of the things that was really important to me, because I found that when the lender took an extra couple of minutes to explain the loan worksheet and explain closing costs, and that tied in perfectly with the way I was explaining the relationship with the lender and what the closing costs were going to be, then we were all prepared, right? And without that, the buyer didn't have it was just one more missed opportunity for Kathy to prove more value and for me to prove more value. And I didn't have to panic in the middle of the night when I couldn't get the lender on the phone. We were going back and forth and, okay, this home has less taxes and this home has more taxes. I was able to do all that math myself.
So what we do is a full pre-qualification, and then we go to pre-approval. And not every lender does that. A lot of times, and Ray can back me up on this, that a lot of lenders don't even go through all the numbers. They just send them a letter and say you're pre-qualified. Our pre-qualification means that we have their application in hand, we've pulled their credit, we've had a full consultation with them. It takes 20 to 30 minutes over the phone, going over their credit report, going over their debt, going over their scenario. You know, it's not just rate, it's what are you comfortable with payment? What cash do you have? What cash do you expect to have at closing? So it's very, very key that at pre-qualification, they do get a worksheet of the scenario that they anticipate doing. So we take the sales price, the type of loan, FHA, conventional, or VA. We pull in that rate of that day and the cost, attorney fees with O'Kelly and Sorahan, our projected closing date. We even guess taxes, if it's Fulton County, Gwinnett, Cobb, what tax range could it be? If they've seen a house that they really like, we'll pull the real tax bill and use that as the example. So when the pre-qualification letter comes over to them, you're going to be carbon copied on it, and it's going to have a worksheet to say, here's your pre-approval, it's conventional, the rate, the down payment, the payment range. And sometimes it's going to be very specific. It's going to say, it's not just this sales price. They are at the maximum of their range. They can't go over this payment amount. So if taxes are higher, insurance is higher, even though the sales price is lower, or if homeowners association fees goes up, that's going to be a problem. So we have to be very careful at what they look at. Sometimes it might say, this is the maximum that the client has asked for, but it's not their maximum.
Right.
And we can have discussions around that.
And that's hugely helpful because let's say, for example, you're dealing with an HOA fee of, maybe what you might consider a typical HOA fee of like, let's say $250, but they find a community in Buckhead that's got one for $550. Like, can they still afford that?
Exactly. Or if they go from Cobb County to Fulton County.
Right.
Big
and
difference.
Instead of having a $2,500 tax bill, they've got a $4,500 tax bill now. Can they afford that? And that's only the first check. The second check is, hey, the lender's willing to let you borrow X, and that's going to require a payment of $2,400 a month. Is that comfortable for you? Right. And then
Exactly.
they say, no, I want to be at 2,100. And I say,
Yeah,
Kathy,
exactly.
gotta be
We
at
have
12
people all the
2,100.
time.
Give me the new number.
Yeah. Yeah, we have people all the time that call me and I'm like, well, we've been looking at, houses online at this price range. I said, well, let's pick one and let's go over that payment and down payment and cost. And then they go into shock going, oh my goodness, no, I don't want that payment. I want that house, but I don't want that payment and I don't have any more down payment. So then we have to adjust what they're looking at.
I don't know about you guys, but I've never shown a home to somebody that was beyond their price range that they didn't like.
Yeah, that they didn't love. So we don't want them to see houses that they can't buy and get their expectations up too high. And again, getting them pre-qualified before you go show them houses, if at all possible, is so key.
It's like, I think we just need to pose it as, I've made the comment before, basically every service provider out there has paperwork, right? You go to the doctor, they want you to fill out some paperwork. You go to the plumber, they want you to fill out some paperwork. You go to the chiropractor, they want you to fill out some paperwork. It's and all of those people are like, okay, I'll just need a copy of your new insurance or whatever. Like, that's kind of what we do. Like, you're going to go show somebody a $400,000 house and take time away from other clients and your kids and your family and all the other things that are important to you. And you haven't asked them any questions about their financing. That's not just like letting it slide. That's just not professional, right? You're not setting a professional tone in the relationship right there, right?
Well, and it's very sad, but not everyone, but a good bit will get a client to pre-qualify or want to pre-qualify, pull credit, and immediately find out that they have to wait to purchase. Maybe they had a bankruptcy 2 years ago and they thought it would be okay at this point, or a car repossession 5 years ago that they forgot about that they still owe money on. Some people, a lot of people don't monitor their credit report or they don't know enough about it or income. I just had one just recently that started a job. He told me he was W-2. I got the pay stub. He's not W-2. He's 1099. He's only had that's self-employed. He's only had it for 6 months. He's not going to get a loan right now. There's no reason for him to even go look. So those are the things that, not that buyers are being deceptive. Sometimes they just don't know. So they need to be pre-qualified just to uncover some of those things.
Exactly. And can you just, while I'm thinking about it, I haven't asked you this in a while, but do you still work with organizations that help with credit repair?
We do. We actually have our own internal department, our credit enhancement department. So If a person has a mid score, if we pull credit and it's a below a 580, then I just do a personal consultation with them and we talk through what's on the credit. I've been doing it for 38 years. So it's very easy for me to look at it, explain to them what they need to do to start getting their credit to a point of being able to purchase. If they're above a 580, let's say I get someone, it's a 650, that's not going to be a perfect rate. The rate that we want to try to get to is 700 or above to get them the best rate. So our department actually looks at their credit report. There's an algorithm that they go through, and it tells me to tell them if they pay this credit card down by $1,000, take this credit card and pay it down by $500, whatever the scenario is, then that will get them exactly that score. So even if it's not needed for them to qualify, let's say they qualify for the loan that they want, we even do it to get a better rate.
Wow. I like that. So that, because, can you explain that, Kathy? Because there's certain credit score ranges that are affiliated with a certain varying degree of risk. So for example,
Right,
from above
correct.
what are the ranges? Can you recall?
Well,
Can you share with us,
if you go below a 700 credit score on any loan, it affects the rate a little bit, not majorly, but a little bit. If you get down in the 650 range, then it's going to definitely be a much higher rate. If we can get above a 760, then it's going to be the best rate that anyone can get. So those are kind of the ranges. When we're down close to that, between that 580 and 640 range, the rate is going to be high if they can even get a loan, depending on what's on their credit report. I mean, somebody can have a 620 score, but not the right criteria on their credit to be able to get a loan yet. So it's not just score. It's
Right.
what's on that credit report. What's it made up of?
I love that. And just so you know, that's not necessarily like do you get any more compensation from helping somebody improve their credit score to get to the next range?
No, not at all. No,
And
no,
so-
we are paid on the loan no matter what rate they get. The loan officer cannot be compensated high or low depending on that at all.
So do you think it's fair to say that there might be mortgage people out there that just don't bother with that extra step?
Possibly. I mean, I hope not, but some people may not have that computer program with their company. I can't answer to that, and or they may not if they're a loan officer that's going off volume and as much volume as they can, and it's not the relationship at all, then they may not take time to even explain that. I don't know if Quicken Loans, I don't know if I've ever heard them ever having that conversation with the client. The internet lenders may not.
I think that is probably the most diplomatic, politically correct response I've ever heard. Good job. So, I just pulled this stat up because I remember this is not quite on subject, but in 2016, and maybe you can attest to this a little, Kathy, in 2016, they took the average net worth of a homeowner versus the average net worth of somebody who wasn't a homeowner or renter, basically. The average net worth of a homeowner in 2016 was $231,400, which was up 15% from 3 years earlier. And the average net worth of a renter was $5,200, which was actually down 5% from 3 years earlier. And in 2018, they updated the data and they said that a homeowner has a net worth on average 44 times that of a renter.
Those are astounding numbers. I know part of that's going to be the equity in the house and your net worth. And plus, I really think when you're a homeowner and you're in that position with yourself or your family, that's a huge step. It's the largest purchase that people make. So that person is more than likely ready to have the savings, have the 401k, building the equity. You know, I just talked to someone last week. I pre-qualified, and she was in her young 40s. She had a lot of credit card debt. She was ashamed of the fact that she did. She had some money in 401k. She had rented in the same apartment for 8 years. Her
Yeah.
rent was $14.39 a month. She had invested $138,000 into that apartment in rent.
Yeah.
And I gave her that number and I said, okay, so you've invested into this apartment $138,000. You're looking at buying a $260,000, $70,000 house. If you would have done this 8 years ago, you would have already owned your house possibly half, you know,
Yeah.
of what you do in this apartment. So encouraging her, and I said, I'm not pushing you to do this. I'm just telling you, quit having excuses on why you're not purchasing. The rates are low. House prices are good. You can go into your 401k plus what you've saved and buy a home and have a house payment within $300 or $400 of your rent in the $250,000 range where she wanted to buy.
Yeah.
So it was just a true consultation of, you're single, you're young 40s, you're spending your money on clothes and other things. Take the Dave Ramsey course. Do whatever you need to do to get everything in line, and make a commitment that in the next year or less, the agent that I was working with, that we're going to help you get a home. You're going to own a home. And I just really encouraged her on different things that she could do to get there, versus saying, I think I'm going to get there, I want to get there, but I can't do this, I can't do that. Giving her an outlet to say, let's get a plan around it. Let's get a 6-month plan around it and talk again in 6 months. And if things happen before that, give me a call. And that's what we did. She couldn't buy right now for different reasons, but we've got her a 6-month plan.
Does that sound salesy to you guys? Not at all.
No, not at all.
Definitely
I think
not.
That is what we are paid to do. Just to make a very clear, direct statement. We are paid to consult and educate and assist our people to build wealth through the purchase and sale of real estate.
And that's the point, and getting her on the phone. I mean, I had her laughing at one point, told her, she told me she wanted to cry at another point.
Yeah.
And I just said, listen, girl, you're going to get there, and I'm going to get you there. If this is your dream, if you said you want to buy a home, let's do this together. I'm here with you. Ebony, actually, from our office, is her agent. Ebony's going to be there for you. And if you want a monthly accountability, we'll do a monthly accountability. What do you need for us to get you in your home and get you out of this apartment? What do we need to do? And when we finished, I said, again, I am not pushing you in any way to do this for any reason other than you deserve to own a home. Do you deserve to own a home? She goes, I do. I said, well, then we're going to do it.
Ooh, my new favorite script. Say that one more time.
Do you deserve to own a home? Yes, you do. So yes, we're going to do that. We are going to get you in a home, and I'm here for you. And I told her, I said, I think you can do it in 6 months, but if it does take you 8 months or a year, I'm still here for you. So we're still going to do this together, and Ebony's going to be there for you, and we're going to help you. And as you get to the next stage, you're going to reach out to me. You're in my phone. I'm in yours, and text me, call me, email me, and let's get you there.
So that's a partner. That's a consultant. That's not a salesperson. Now, Kathy, just so you're clear, is using sales language, right? Is speaking in a very confident, directed manner, but you can tell she's not in it for the commission. She's in it so that somebody can hand her those keys. Somebody like Ebony, the agent, could hand that person the keys and be like, this is step one in helping you build wealth. Congratulations. Do you think that person?
Yeah, I've been doing this for 38 years.
What did you start when you were 3?
Yeah, I keep lowering that date. I started when I was mid-20s, and I hadn't owned a home yet by myself. I hadn't owned a home. I did within a year of becoming a loan officer, learning the business. But I came out of the karate world, and that's where my husband and I know Bill. And I told myself after the first couple of closings that I felt so blessed that I was able to be a mortgage originator and get people in homes. And I never, ever looked at it I have to make a living just like y'all. I'm 100% commission, but I never looked at that loan to say, okay, I'm going to call this back first because they're a $50,000 or second because they're a $50,000 loan and this other one's a $400,000 loan. I don't look at them as a number. I don't look at them as a transaction. I don't like people to call a mortgage closing a transaction or a unit. It's a home. It's a person and it's their home. It's a big deal.
I love that. I want to say one other thing, and then I want to see if anyone has any questions for you. You just referenced. You are truly you have the same job we do.
Correct.
Right? We are independent contractor, 100% commission entrepreneurs. And I was just hoping that you could share with me, one of the things that I have really loved about Keller Williams is the way that they help me think differently. And when you think differently, you behave differently. When you behave differently, you get into different rooms with more accomplished people. And before you know it, there's opportunity everywhere. And I just wanted to maybe ask you to share some thoughts on some of the things that you've learned from Keller Williams and why you have chosen to affiliate and partner with us for so many years. And just speak your mind on that if you don't mind.
Okay. Again, 38 years in the business, beginning a loan officer in North Georgia in Gainesville. Worked with Century 21 and Prudential and all the names back then. Came over to the Cumming area because I was the manager over new construction for the bank up there. Started getting more involved with the builders and doing the construction loans and the permanent loans for them and the borrowers loans, and got involved with Remax. Remax was the big player back then in that day, and all the Coldwell Banker people were coming over to Remax. And then in 2000 and when did Keller start here in Atlanta? Was it
99 in Atlanta. And
99, yeah. In 2099, I was working at Home Bank Mortgage. I was a regional manager, and Kay Evans was our real estate teacher. We had a real estate school within our mortgage company. And Kay and I met, and she said, I just met this gentleman. I've got this opportunity. I think I'm going to take it. I'm going to go talk to Peck Flood and start this new real estate company in Atlanta called Keller Williams. And the gentleman that she was talking about was Bob Kalinsky.
Yeah.
So knowing Kay, getting to know Bob, I had the opportunity at that point to be the alliance partner for manager for every Keller Williams office that opened in Atlanta. So we would on board as they opened. We put loan officers in there, having the MSA platform. I have been to Family Reunion and Mega Camp and involved in Keller since that day. And I'm very, very passionate about the learning platform, the godly, God first, family first platform that has always been in place with Keller, and all of the people that I know for all over the years. I mean, it's just an incredible organization that is completely dedicated and consistent in learning and being Gary Keller always in the front of everything that happens, in shifting and taking the business to the level as quick as he can, as fast as he can. And I say, when people ask me, and we used to joke about it, but it's the truth, I show up every day to Keller. I have a mortgage company that I work for because I have to, but I show up every day to Keller. Yeah. Keller is in my office. I've done it for 14 years. And the learning, the the platform, the shifting, just whatever is needed, it's there and it's consistent. And I really don't have, I do have agents that work at other offices because, you know, of different reasons, but I don't really know any of their platforms anymore because I've been so ingrained in Keller Williams since 1999.
Yeah, I love that. What about from a business standpoint? What, just in terms of your access to things like Shift and Millionaire Real Estate Agent and some of these conventions and Bold and coaching and training and all that stuff. What can you speak of in terms of that?
Well, our industry, unfortunately, the mortgage industry doesn't have as much of a platform in learning and growing as Keller does. So my growth has really been around that. And I know where Bill's kind of going with this on Bold.
I wasn't actually going there, but please share.
I'll go there. I'll go there. In 1999, you know, or whenever Bold started, it wasn't 1999. I
2009.
I always encouraged agents to go. You know, I get it. I've seen so much growth with agents, but I never thought that I needed it. I mean, why would I need it? I'm so bold myself. I don't need it. And that was always kind of my attitude. And then the last Bold, when it was announced that John was going to be the teacher, and, you know, and I kept looking at him like, gosh, why don't I do it? So I had a conversation in the hallway with Bill that morning and said, hey, I'm thinking about doing Bold, you know, myself. And he goes, really? And he goes, so you'll commit to do it? I said, yeah, I'll do it. So we get in the team meeting and everybody's, you know, Bill's talking about Bold and he says, guess who committed to do Bold today? So there I was. I committed and I was in. It was a life changer for me, y'all. As bold as I am in personality, I'm a black belt in karate, so I'm a strong-willed female anyway, but I'm also a black belt. So I have a strong personality. I didn't think I needed anything to make me bolder, but I'm telling you right now, that changed my entire onset of how I talk to people, what I talk to them about. You know, just like the conversation with the lady, I got bold with her on her credit card debt. I got bold with her on her plan. It wasn't just a general conversation anymore. It was let's make this happen, or confirm today that you're not going to want it to happen. And Bold did that for me.
Say that again. That was great. Say that again.
So in Bold, and what it taught me was, we're going to confirm today, either you are going to purchase a house, that this is your path, you're going to purchase a house, or you're not. And that will dictate whether we continue conversations or not. Are you going to purchase a house? Do you want to purchase a house? I mean, it is just a question that when you're looking at someone and they're going, you know, down this path, this rabbit hole with you, just ask the question. Do you really want to purchase a house, and do you want to do it in a time frame in the next 90 days, or is it 6 months? What do you really want?
Right. Are you committed to
Are
what
you
told me you're
committed?
committed to?
Yeah. And if you're not, that's fine. Let's figure out what that looks like and when you are going to commit.
Right.
And then just be quiet. And it's amazing what you'll get from there. But
Yeah.
yes, Bold was an incredible change for me. I'll do it every time it comes now.
Oh my gosh. As soon as I don't have to drive the Bold train anymore, you're in.
I love it.
All right. Who has some questions for Miss Kathy? About anything. You can ask as most advanced question to the least advanced question.
I have a question. I don't know if I missed it when you were explaining, but with the pre-qualification, you told me what that consisted of as far as the application in hand, full credit, and what you do to pre-qualify somebody. But with what we want from them prior to showing a house, is it a pre-qualification or pre-approval? And
You want a pre-qualification before showing a house at least.
Okay.
But from that pre-qualification, you want to talk to the loan officer and or know from the buyer that they've had enough of a consultation to know that everything looks okay.
Okay.
Because the next step is pre-approval, and pre-approval means that the loan officer has actually taken time to look at their documents, look at their bank statements, look at their pay stubs, look at their tax returns if they need to be. What do they need to look at and certify that everything looks as if it will work? There's no red flags. and it's ready to go to underwriting actually at that point. If in our situation, if we get a red flag at pre-qualification, we ask for the documents immediately. If that doesn't resolve that, we're telling everyone at this point, until we get an underwriter to look at it, you really don't need to go look yet.
Okay.
We need to know that this is going to be okay, instead of finding out, unfortunately, like some clients do after they're under contract, because they haven't given any documents to the loan officer, or the loan officer hasn't looked at it. That's not what you want.
Okay.
You want to know that there's no red flag, that everything has been reviewed as quickly as possible. So you want to encourage your borrowers, like I know you've done that pre-qualification with a loan officer. Have you done the pre-approval yet? Have you given them their documents and then discussed it with them? And you want to encourage them to do that, I would say, within 5 days of doing that pre-qualification.
Okay.
That would be your goal.
And I want to add in here that I do require a pre-approval. And I explain it to buyers this way, that there are a lot of decisions you have to make in purchasing your home. And when we're looking at homes, it can be overwhelming. And also, once we go under contract, then we have to start inspections and making those decisions. So if you have this already done and completed, you've made it easier on yourself.
Right. I found that the more they know about the process, the more comfortable they are at making those decisions. That's exactly right.
Hey, Kathy, I had a question. This is
Okay.
new. You said they're tightening up jumbo loans. That doesn't sound very encouraging to me, because a couple of my clients, that's what they're looking at. And so what do I tell them?
Well, they need to know where their lender stands with that. And unfortunately, it could change any day, but at least right now they need to check with their lender to see where they stand on jumbo loans, if they're seeing anything changed, if they're cutting back on anything, because the lenders may not be reaching out proactively to let them know. So they should reach out to them. I think Wells Fargo and all the big banks, the only one that I've heard, just so y'all know, the only one that I've heard that we work with, and we do in-house underwriting, but we do broker out jumbo loans, is Chase. Chase has pulled back this week, and that's wholesale. That's us. It may not be with their inside bank lenders, but just find out who they're with and have them check with the loan officer to see if there's been any changes with their company.
So just a quick note on that. I think the takeaway here is that they don't know. They don't have time to know, and they don't know, and it's not their job to know every single little variant in the mortgage world. And that's why it's so important to have a partner. So in new, you might say to one of your prospective jumbo buyers, hey, there's obviously a lot of things happening in the marketplace. And what we're seeing is each lender is learning something new basically 3 times a day. And so it's really important that you have somebody that you can contact when the time comes and when you have questions, because exactly the way you've done loans in the past may not be the way it goes right now. And that's why you need to reach out to Kathy Vitale with Shelter anytime you have a question. Do you understand?
Can I ask Kathy, does that, I'm sorry. Can I ask Kathy, does that also apply to if you need a jumbo loan on top of a VA loan?
No, VA jumbo loans are not affected.
Okay, thank you.
VA it's its own entity. So VA, the only thing you're going to have a concern with VA now is, like every other loan, is getting the appraisals back in time. If you do not have contingencies for appraisal finance short on any loans right now.
Say that one more time, please.
Do not ask for short financing or appraisal contingencies right now on any offer you're making, because they're not going to happen. The industry has too many refinances in their systems. They have too many changes going on daily. that if you try to do something, and I'm going to say less than 21 days in financing or appraisal, and when I say 21 days, this is very key, y'all. The day that the contract goes bonding, that needs to be in the buyer and the lender's hand. You need to know that the lender is fully engaged that day. And right now, we don't have the luxury to allow the buyer to wait for the appraisal to be ordered after due diligence. Because if you have 10 days due diligence, you've just taken away 10 of the 21 days to get the appraisal back. If they wait to order, it's not going to happen. It's not going to come back. There are appraisers, and James said it today on the call, we've got a very boutique appraisal team. It's the best of the best in Atlanta. We are down to 50% of that team wanting to even go to a house to do an appraisal as of this week.
Mm-hmm.
And we're trying to work through that on how we can schedule them getting to the house without anyone there, you know, being protected themselves physically. So the industry has a lot of challenges on appraisals right now.
Yeah.
One thing I wanted to add that Kathy can do is run it through direct underwriting, right, Kathy?
Correct. So direct underwriting means that we push a button, it's automated underwriting. That's what everyone uses. And the direct underwriting system will tell us if we can waive the appraisal or just get a drive-by. Fannie Mae has always had that in place, and Freddie Mac, but just recently this week, they've opened it up to more of an open opportunity on houses. What happens is you've got in the system, in our system, you have the application from the client with their credit, with their income, their job stability, and now we put the house address in, and we put the sales price in, and we put the down payment in. All of that's flooded in, and we do an automated underwriting scan. That actually tells the underwriter what to get. Do you need one pay stub, two, whatever? But it also tells you if you need a full appraisal on that house or an appraisal at all. Sometimes it's a full appraisal. It might be a drive-by appraisal, and sometimes it's not even a drive-by. They've certified that house. The down payment's strong. The customer's strong. They don't even care if we know that house is physically standing at that point.
Gotcha. Anu, did that answer your question from earlier?
Yes, it did. But then I'm wondering if I'm a buyer's agent, how am I supposed to tell them that we're not going to worry about appraising the house because they're backed up? What words do I use?
Well, what you
not
tell,
that I have a client, but
yeah, what you do is this is a discussion. Now we can still order an appraisal. This is a discussion that we have with you, the buyer's agent, and with the buyer, and say that the automated underwriting system was able to pull enough comparable information to waive the appraisal. Are you comfortable with that? And if the client says, you know what, I want a hard appraisal, then I explain to them, I said, you do realize that all you're getting is a person that goes out, takes pictures, uses the same information in the system, puts it on a piece of paper and puts their name on it. Because that's really all an appraiser does, is put a little bit of their opinion on the data that this system has already pulled.
Right. So you're communicating just the facts of the marketplace. So for example, if there's a possibility that no appraisal would be required, or if a loan that in the past would have been available and is no longer available, all you're doing is telling the public what the realities are. Just because an appraisal might be not required doesn't mean that you can't get one. You just want to be able to understand and explain kind of what that actually means.
Yeah, it just means that there's enough data on that home and the system, and that you as a client are so strong that it's not required by the lender.
Okay, I like that. Yeah.
You are so strong.
That's right. You are so strong as a client, and the house comparables online are that it's not going to be required. Awesome. And I love telling people that.
Great. I have some questions for Kathy.
Go ahead.
Charleston here. Kathy, I'm so disappointed that investor loan is not available anymore.
I know, it's gone. Yeah, it's gone. The investor non-qualified loan is gone.
Do you think it's going to come back, or is it just temporary?
Well, to be honest, in my opinion, which I'm always honest, I don't know why I said that. Well, not always. No, I try to be. Sometimes we have to put gray areas in to lower the pain. When this market had these challenges back in 07, 08, 09, and this was the first group of loans that went away, it took a good 6 years for them to come back. So if we go by history, they will not come back quickly. Now, the key is, though, our company and a lot of companies like ours, our NewRez, our servicing company, put a lot of money into the programs and the underwriting guidelines and the underwriters and the processes around these loans. So as soon as there's enough liquidity to back these mortgages, they will bring them back as quick as they can. How long that takes, no one knows.
So you're saying right now it's just on hold for a bit.
All of those type of loans, the special investor loans, the stated income bank statement loans, those are all gone. They're not available. The jumbo loans are still here. They're still here, and only a couple of entities have pulled out or changed any guidelines around that. But it is the beginning of that correcting a little bit also.
I
Like
just
Kathy
got
said, they make money when they lend money.
Correct.
And they have established a ton of systems and infrastructure to be able to provide those types of specific loans that are no longer available. So it's in their best interest to push and push and push for them to re-enter the marketplace so you guys can take advantage of it.
Right.
and I had another one about the credit report, your credit score.
Correct.
So I'm an investor, and I often got into this thing where, you know, because I have so many properties under my name and stuff like that, sometimes my credit score doesn't go as high as I want it to go. So I might just have to come by and get your services for me and my wife. I know right now I'm trying to offload a couple of properties, so I think it's gonna improve. But I know that because I'm, for lack of a better word, because I have so much so many credit, so I'm gonna definitely come talk to you about what.
Yeah, we can without me pulling credit, Charlton, you can pull it. We can look at it and glance over it and do that easily.
I like to do that for my personal reasons.
Happy to do that. Happy to do that.
Cool. All right. Well, I want to remind everyone that Kathy is our partner, and she is her consultation is of no charge and no obligation. And I just want to again thank you for your commitment and for your partnership with our office. And I appreciate you coming on the call today. I just want to be respectful of everyone's time. If you have any follow-up questions, you can reach out to her directly, and I will speak with everyone soon.
Yeah, and any of this, guys, you reach out to me, Tammy, or I'll schedule, you know, now it'd be Zoom call or over the phone. But if you want more details about this to understand it, you know, any of the mortgage industry, just reach out and we'll schedule time to do that.
Thanks, Kathy.
Thank you so much, Kathy.
Thank you.
You're welcome. Y'all have a great day.
You
Rest
too.
of the week. Happy
Thank
Friday
you.
tomorrow.
Happy
Thank
Friday.
you.
Bye-bye.
Bye.